everybody. Welcome back. This is our next video in the series on styles of trading. Today's video is on directional day trading, one of my favorite styles of trading, a style that I've been utilizing over the entire 23 years of my trading career. This is part 5 of our series. It is a low risk, high odds technical day trading style. You technically day trade to achieve your daily profit target. And then you shut the computer off when you do, or if you start to give back some of your gains. And I'm going to talk a little bit about risk management and how you can manage or ring fence your profits as a technical day trader. It applies to all of the trading styles. You should always ring fence your profits, make sure that you keep your profits. It's one of the keys to consistently trading. But without any further ado, I'm going to jump right in, tell you a little bit about myself very briefly. Michael DeJoyer. I've been a professional trader for 23 years. I have all my licenses, Series 7, 63, 55, and 24. I've been a trader, risk manager, market maker, trading desk manager. You name it, I've pretty much done it in the financial industry. And I am sharing with you some key strategies and tactics that I've used at different times during my my financial career. And it's very important that that 23-year career is mentioned because 23 years is a long-term time. I've seen many bubbles. And that's the key point here is that there's been many financial bubbles, bursting of bubbles, inflation of bubbles, and deflation of bubbles. I really believe that, this is one of the things that I've noticed over 23 years is that bubbles are made to be burst. And I say made because I believe that the market does kind of create these bubbles, or the Federal Reserve in their actions and the way that the economy is managed does kind of create these bubbles. And you have to learn the dance steps of the creation and deflation of bubbles. It's what we do as traders is we watch the money, we follow the money, and we use the right tactic at the right time during these bubbles, inflation and deflations. With that being said, I have jumped to my Dash Trader software. I'm going to make sure that I am projecting it properly. Hopefully you can all see my screen here. And Dash Trader is a key tool in your trading of these financial bubbles, inflation and deflations, or boom and bust cycle. You can see I have my S&P chart right here. We're going to be talking about directional day trading. I'm going to go right down here to load settings. You just right click on the chart, go to load settings. And I have a nice configuration here, the moving average pair and on balanced volume. Really, really good for day trading. My main indicators for all of my trading are price, volume, moving averages through time. I am a very big believer in using price and volume through time. Keep it simple. Stupid is a great way to trade. Try to keep your trading simple. Because we are talking about intraday trading, I'm going to have to configure my screen a little bit differently. I have a little bit of limited space on here. So usually we would be looking at multiple time frames, meaning that we'd be looking at the daily chart to start our analysis for day trading, but then we're going to drill down into some smaller time frames. So usually you're going to have at least 3 time frames of any chart, of any stock in your chart. So you want to have, if you're technically day trading, you want to have your daily, 15-minute, and 5-minute, okay? You might even have a 1-minute chart, right? So you'd have 3 intraday time frames, 15, 5, and 1 minute. You may even have a 60-minute, 15-minute, and a 5-minute. If you're longer term day trading, like relative strength trading, which we've already covered, then you might have those that 60-minute, 15-minute, and 5-minute. If you're shorter term, and the reason why you have the bigger time frames is you want to eliminate some noise from your chart. So you don't want to have, so if you're looking at your 5-minute chart as your smallest time frame, you're not worried about the less than 5-minute jiggles, that price gyration. You want to focus on the 1 minute, the 2-minute, only if you're scalping or really, really intraday trading on a small time frame. And that's just to get more refined entries. For me, small price variations and fluctuations are only really relevant if you're scalping, okay? You really want to keep a slightly bigger perspective when you're intraday trading, technically day trading, relative strength trading, or momentum trading. Only in scalping and a little bit in momentum trading do you want to get a little bit more granular and focus on those 1 minute, 2 minute charts, or even your level 2. Scalping, you need to look at your level 2, which I do have up here. I have my level 2 right up here. Let me just jump right in. I'm going to take my S&P. Okay, so here's my S&P's level 2. And then here is my chart. Just want to show you that if I go to my 5-minute chart on the S&P, okay, if I go on my 5-minute chart on the S&P, I can see that the point of control here is at 425. I'm going to zoom in a little bit using my my mouse, and I want you to realize something right from the very early part of the day. I want you to look at the indicators that I have on my chart. Okay, I have my point of control from my price by volume indicator. So that tells me that yesterday's average range, right in the middle of yesterday's range, that is the area where the majority of the volume is done on this particular chart. Next, I want you to see that the moving average is crossed over, giving me a buy indicator. So my immediate bias for technical day trading would be to the long side. Okay, and I'm getting a buy setup with a double bottom going into a very, very important 10-period moving average. This is the 10-period simple moving average and the crossover of the 20. So for me, the 10 and the 20-period moving average give me a great indication that this is going to give me a nice move to the upside. And sure enough, my first indication is right there. I'm getting a crossover. I get a nice touchback near the low of the day. If I'm going to buy, I want to buy off of a bounce off of support. The low of the day is a natural level of support. Now look, I can go right click, I can go data config, and I can click right here, show pre-market data. And now I can like slip right in here and see the pre-market data. Now the pre-market data shows the market rising higher, right, in the pre and the post market. It shows me that this is possibly going to be a move to the upside. And sure enough, it is a move to the upside. We get a great entry down here at 425, let's say 70. Look, and if I want to see a more refined entry and I want to look and see in a little bit more of a granular way, a little bit of a zoom in, I can go to my 2-minute chart. I'm going to take off my pre-market data. You can remove that just so I can just see the actual trading, and you're going to see a beautiful buy setup right there. So you see big green buying bars that totally engulf the prior bar. This is on the 2-minute chart. Let's go to the 1-minute. Okay, this is the 1-minute chart right here. So in Dash Trader, we have a great little feature where you can just click on these hot buttons, and you can see we have a low, a higher low, a double bottom with a higher low. So we have a triple bottom on our 1-minute chart. And once we pass the point of control, that's on price by volume. Now we're only looking at today's data because we're looking at 1 minute. We pass the point of control, stock goes bullish, price is above the moving average, above the point of control. We had a triple bottom with higher ascending higher lows. We break out to the upside. Now, just hypothetically, not, let's say you don't get the perfect entry down here where the crossover is. You let's just bring up my little crosshair tool. So here is my crosshair tool. If I were to buy this at 425 spot 88, that would be the perfect entry, but you don't always get the perfect entry. Let's just say we get it here as it blasts through. We get it at 426.01. It makes a huge run all the way up here to 426.40. That's a nice run on the S&P. Even on 100 shares, that's $40, right? So, you know, a pretty substantial run from the point of control all the way up to a decent level. Now, why would you say, okay, why would I get out? Okay, here's a high, failure to make a new high. If it makes a high and a failure to make a new high, usually your run is done, okay? So on technical day trading, we're not being greedy. Now, let's also talk about another way to manage your risk in technical day trading. Let's say I was to get in here, okay? Let's say point of control crossover is my entry. And remember what I taught on the last lesson is how I draw my my risk levels. So I'm going to put down here my red line is going to be my stop. Okay, I'm going to use my stop at the low of the day. Okay, so my stop's at the low of the day. My entry, I'm going to make it a blue line. my blue line, horizontal line. I'm going to put my blue line in right here. This is my technical entry as it breaks out. I mean, technically it's here on the 1 minute. So I'm going to put on my blue line. Okay. Okay. Here's my blue line. That's my entry. Let's make it a little bit less aggressive. I didn't get in right at the perfect entry. I got in right here at 420. I'm going to make it actually, yeah, 425.90 is my entry. Okay. 425.90. So now if that's my entry, let's say I took 100 shares. I'm very conservative. I'm taking 100 shares on this technical day trade. Okay. 100 shares in at 425.90. This is what I do. I just take a rectangle. Now, if you've ever wondered why all of these charts, like all the different trading softwares have all of these tools in there, now you're learning how to use these tools. So this is my risk. Interior color is red. I'm going to do a little bit of an off shade of red. And I'm going to make this a darker shade of red. This is my risk. I'm color coding it in red because it's my risk, right? I'm just going to double click here. I'm going to reduce my transparency. Okay, so that's my risk. Okay, if I got in at my entry and that's my stop, that's my risk. Okay, now I'm going to say I'm going to click on here. I'm going to left click on it. That right click brings up that box. So I'm going to right click on it. I'm going to duplicate it. Okay. Now I'm going to drag it up here. Okay. That's my target, my first target on this play. Okay. My first target on this play. I'm actually going to bring that back down. I'm going to make a new box. So when I get into the play, that's when I put my limit order out for my target. And I want you to see what I'm doing here. I'm taking this. I'm literally sizing it up. And I'm teaching you what you do with all your technical tools as I actually do and use them in the way that they're meant to be used. This is what you learn if you're learning how to trade on a professional trading desk by true professional traders. These are the steps of the dance. You're learning the steps of the dance as far as professional trading goes. So let's just okay, so this is, I'm just going to increase my transparency a little bit. So I take this, I increase my transparency, I hit OK. That's my first target. So my first target limit order is going to be right here. So what do I do in terms of mapping out my trade? I'm going to put my horizontal line on there. Change the color. This is my technical day trade. Entry here. Hits my first target. I sell half the position. Now I have a choice, right? I have a choice. I can do one of two things. I can leave my stop in the original position down here, in which case the worst case scenario is I have a flat trade. Okay, I took some profit. The stock and the position reverse came down. It didn't go all the way down to my initial stop. Okay, didn't go down to my initial stop, which is down here. Now I have a choice as it starts to go up. I can re-add, take a new entry because we have a low, a higher low, and now another higher low. So what I'm going to do is I'm going to take this. I still have 50 shares. So, and I'm going to mark on here, text note. Okay. This is my original stop. Okay. Here's my original stop. original entry, 100 shares. Okay, this is my original entry, 100 shares. Okay, that's my original entry, 100 shares. And I'm going to do right here. And guys, I really have to point out how powerful DAS is for taking notes on your charts, how powerful the charts are in general. So here is a target for, I'm going to put this as first target, 50 shares. Okay, first target, 50 shares. You hear that little beep is the moving average crossover. I have an alert to beep when it has a moving average crossover. So here's my first target of 50 shares. Okay, now I'm going to manage my position like this. This is a technical day trading being managed in real time on a real chart during today's market data. And you can manage every single trade like this. So now we've taken our profit. So we bought it at 425 spot 90. And we are now at 426.25. We took half of our profit. So we made, I mean, this is not a huge amount. We only did 100 shares, but we made $12.50 on this small partial position. And by the way, you could do 500 shares, in which that would be $12.50 times 5, which would be, roughly $60 or so dollars, $70. So here we made, okay, so we took our profit. Now here we're taking a new trade, right? We're going to take a new entry. My new entry is right here. Okay, my new entry is right here. Make my blue entry line. Okay, and then now this is my new stop. My new stop is right down here. So now, make this red for my stop. Okay, so now if I were to use my little boxes here as my risk reward, I want you to see here is my risk. Here's my risk. Now I could use this very small amount for risk, but 10 cents is not enough for me. I'm going to take this same reward box and project it out. Okay, now I'm going to put my first target over here, which already got hit for my next 100 shares. Okay, that's my next target. Now I have 100 shares because I sold 50 the first time around on the first rotation. All right, so here it is. Now I have another entry. Add of 100 shares plus carrying 50 from original position. Okay, so that's my add from my carrying is spelled wrong, no big deal. So now my original stop, I'm going to update my original stop. I'm going to drag it up here. Okay, I'm going to put new stop to reduce risk. Update stop to below new low. I'm going to say new daily low. New daily low to reduce risk. Okay. Boom. So now I have, and now I'm carrying 100 shares. I've made that same amount twice. So I've made $25 at this point on 100 shares. At this point, booked two profitable trades with now limited risk. Okay, so now I've done two profitable trades with now limited risks. Now, guys, can I take yet another trade here? I can do this exact same thing all over again, right? I can do the exact same trade all over again, and I could do it here. I got a yet another moving average crossover right here. I can take this same box, put it here, and now I can use this box again to project this up. Okay, so now I've just done the exact same thing again. I can update stop below the new daily low to reduce risk, move it up to here, move this up to here, and now I am carrying my original position from my first trending move. I've booked profit twice, and now I've taken all the risk out of my trade. Now, if you do this every single day on every single one of your trades by following the analysis technical day trading rules, this is just the S&P, but you can do this on any stock that's giving you trending indications. Key criteria, key factors for you to follow technical day trading: price and volume through time, having the moving averages, the moving average pair, price by volume so that you can see the point of control, having good charts that have pre and post market data, and of course, having good level 2, good execution capabilities, etc. Okay, now obviously selection is very important, but what are you looking for? T, right? Trend, pattern, trigger, stop, target, management in between. That's the key to technical day trading. I hope you found this educational lesson informative and that you saw how we could take and manage trades to riskless. I'll see you in the next episode, but let's jump before I jump off here. Let me just tell you a little bit about your next steps. Next steps, certainly if you'd like to continue learning with me and that what I've just taught you makes sense and you'd like to take it to the next level and keep on going, you can continue learning with me and Das Trader. You can go to learningdaytrading.com, scroll down to our featured educator section, just click on my picture, select which coaching session you'd like to take, what you're interested in. I really recommend that anybody who's watching this that feels that this really resonated with them and that this makes a lot of sense, that they should take at least a 30-minute consultation. It's just $50. Then you can decide what you want to do. If you think 5 hours or 10 hours is necessary, it's $300 an hour, but there's discounts available if you'd like to purchase either a 5 or a 10-hour package. We look forward to working with you. I look forward to working with people who really want to learn, who are interested in learning trading. And really my goal is to teach you how to trade in a riskless way, not this YOLO trading. You only live once and you risk it. For me, trading and professional trading is about taking small managed risks and really trading consistently as a profession, as a business. And that's exactly what I'd be looking to teach you, having a trading plan, managing your plan, just like you manage any other business. Hope you found this class very educational and informative. Look forward to working with you. Trade well, everybody.